hello, how are you? Hello, everyone. This is Jen.ray speaking. Hello to everyone in the universe. This is Wham. Thank you for tuning in. Wine and mortgage, or we can do wake up juice. You could do whiskey. You could do water, whatever your W is. I mean, last week we had watermelon. So, I mean, it is what it is, you know? So grab whatever it is, whatever in mortgage. I keep saying we're going to change it to that. We might should. Because wine this early sometimes can be rough.
Well,
it is early in the morning.
If it's the end of the month.
All right. Well, we've said our hellos, except for my guest.
Introductions.
Right, so we'll give introductions. Obviously, you all know John. He's here with me every week, keeping me on track and telling me to hush when I need to. So, but here's John, here's me, Jen.ray, and then we have Miss dleo with us today. And she is also a lender, but I am going to let her introduce herself because she probably has a great little elevator spiel.
Oh, thank you, Jen. Thanks for having me, first of all. And I know it's funny because people think, oh, you got another lender on your two lenders, you work for two different companies, which we do, but we are colleagues, right, in our industry, and we love to bounce ideas. And to really know what's going on in the market, you gotta know what everybody else is doing.
Yep.
And so I appreciate your partnership in that sense.
Yeah, for sure.
And so I'm dleo. I have been in this industry for like 30 years.
Ooh, don't she look good, y'all?
I mean, right out of college. And so I have seen, I think, every aspect of it. Yeah. But what I haven't seen is what we're going through right now. And I think
let's talk about
this. Will be a good thing.
That's a good thing.
What are we going through right now? That's interesting.
Well, it's, here's the golden question, right? And I think I get asked this 5 times a day, and it's totally okay because it's a legit question.
Right.
Sure.
What's a rate environment? What are rates going to do? When are they going to go down? And those are all really, really valid questions. What's interesting to me is I think it kind of matters who you believe, right? Who do you believe?
Do you believe Barry?
Do you believe Barry Habib, which is who you're referring to, which I do. I mean, he's a guru.
He's pretty good at it.
Yeah. So I follow a lot of really good economists, strategists, money managers. Barry Habib is one of them. And one of them that I really admire is a guy named Edward Dowd. And he is a legendary...
Edward Dowd?
Yeah.
Okay.
Money market manager. Okay. He's an economist. And he put out a really, really interesting report.
Really?
And it sheds some light on that question that you just asked, like what is happening? And what was interesting is that one of the signals, right? One of the major signals of what the feds use to determine whether they're going to, do a rate hike or something like that is jobs, right?
Yes.
So unemployment.
Sure. Right. Makes sense.
So what was interesting is what they found is ever since the pandemic, we have had folks leaving the workforce in amounts that we haven't seen before, right? And they're going on disability. And the one thing about disability is it's not counted in the unemployment rate.
Really?
Right, but costs.
Yes. But what it's essentially done is it has made it to where one of the main signals, right, for the feds is inaccurate. They really feel like the unemployment rate is about 1% higher than what the feds are using to determine their
because there's people on disability.
Because there's people on disability, huge amounts.
So what are they saying was, why are more people on disability now? Because of effects of COVID, and they just kind of found a way?
It's kind of unknown, honestly, but again, it depends on who you believe.
Right.
And, those are those that believe that, that COVID, whether it was the vaccinations or COVID itself, caused a lot of people to have to go on disability.
Right.
And permanent disability.
Some did have crucial effects of it.
They did.
For sure.
Yeah.
Okay.
And so
That's interesting.
that is what's interesting. And people often say, well, it's just 1%. Like, what's the big deal? You know, but it is very significant because, for example, right now, if you're looking at what the feds are looking at, which is about 3.6%, is what they feel is the unemployment number,
right?
When it's really probably about 4.6.
Again, which is higher than
which is higher, and a lot of people are like, so. But here's the thing: at 4.6, the feds stop the rate hikes. They stop. You know, bonds are getting back to, you know, where they need to be, and it stopped.
Right.
But honestly, the feds are going to keep pressing that hike button until they realize
that more people are not working.
Yeah, the numbers are skewed.
Okay, so let me ask you this then. If disability is not included in the count for unemployment, is there a difference in employment numbers? Does that make sense what I'm saying? Like, okay, sure, there's 3.6 people that percent that you're seeing as unemployed.
Yeah.
But does that, I mean, is there 1% less of people in the employed number, or they don't even count that? Like, I'm just wondering, like, where those numbers, you know what I mean?
Well,
like, how are they skewing that?
Yeah.
That's where my brain goes. Are we skewing this to make it, right?
To make it seem like you need to have the rate hikes? That's a really good question.
Yeah.
And I don't think we know. Right? I just know it was interesting, the research that's been done to find out, and it's significant. For example, you've got 5 million people that are unemployed, but 2.5 million of those are on disability.
Right.
So that brings a question. Why are these people going on disability? Has what it takes to get on disability been adjusted somehow, or what's going on there? Why all of a sudden jump?
I mean, they really feel like it goes back to the pandemic and whether it's you had effects from the vaccination or you had effects from COVID itself.
I do feel naturally that people will do. People are more willing to do stuff that they can get away with.
Oh yeah.
There's only certain personalities that will be like, even if I could get away with it, I'm not. I'm that type of person. I got to sleep well at night. But I mean, human nature, without that, like talking yourself away from doing it, it's very easy to be like, oh, I can get this and just stay at home. I mean, so I think it was a lot easy. Yes, and it was encouraged. It was okay. There was a lot of stuff that happened when we were in lockdown, and a lot of voices and everything kind of connecting with our our yuppies, so to speak, our young professionals. Like they were just like, well, I can work from home. I'd rather work from home, or whatever the case may be. Or everybody wants to be an internet star now. Let me just do that.
Which is what's affecting the commercial real estate.
Right.
And people are like, oh, why do I care about commercial real estate? Well, you do.
Because I don't need a building.
Because that's a direct correlation with what's happening with the economy, right? What's also interesting about that is this. Again, this is my humble opinion.
Give it.
But, dun, dun, dun. What I think is going to have to happen is the feds are going to realize, holy cow, we've made a really big mistake. And we are now going to have to do an emergency cut of the rates.
That's what I see coming.
Yes.
And I'm glad you said it, because I was like, am I crazy for thinking this?
No.
When do you think it's coming?
Well, we have a monetary lag of about 12 to 18 months. I mean, who knows, right? If I knew, you and I would be in Vegas right now, and we'd be having a good time.
Yes.
We'd be at the Derby. I want my hat.
I mean, wherever
to Kentucky
that we feel like we could predict this stuff,
true.
right? We would be having a party.
For sure.
But that being said, I think it's going to come quick, and I think it's going to be the likes that we have never seen.
That is interesting. Now, I think it's coming quick, but I don't think it's going to be twos and stuff like when COVID.
No, maybe not twos, but I think it's just going to be
but more of a we aren't in a pandemic.
Yeah,
like we've never seen before. These are the rates. I was thinking that as well. And but again, too, going back to unemployment and that kind of stuff, because I always tell people, I'm like, if the rates are really, really low, that's a bad sign for the economy. So I'm like, so really, 5s and 6s are, like, I tell them, like, don't be upset at those. You know, yes, we want them to drop. Yes, we want them to stabilize and come back to where we're used to. But if they do it really quickly, or if they go really low of the likes that we've never seen, that means people are losing jobs. And that means the economy is stagnant. Stuttering. And it's just chilling. And eventually it's going to tiptoe into your groceries and how much those cost. And
Absolutely.
Right? So I'm like, it's a give and take with like the love and hate relationship of rates. I mean, the rate is what it is, but if you can afford the payment, right? And sometimes, and also over time, everything balances out. Because right now you're getting the house cheaper than you're going to get it in 2 years when the rates do drop. Right? Right now, the rates being where they are, you're getting houses for cheaper, I think.
Well,
because everybody was given 30, 50,000 over during COVID.
Of course.
So that's what I mean. So it's kind of a,
Well, what's also interesting is that we still are in a major housing shortage. We have more buyers than we have inventory, and that's why
that is true. Even new
builders
construction
have an advantage.
And they're even...
Has that ever not been true in this area, though?
Well,
I mean, from what I've been told, Houston is persistent about having a housing shortage.
We constantly have people moving here for growth, and they move like, before we have space.
But now let's throw a monkey wrench in the works. I read an article recently, just this last week. I believe it was Houston Cron. Anyway, it stated that people are leaving Houston in record numbers now.
Ooh, that's interesting.
I have not heard that.
I haven't heard that one either.
I had not heard that perspective until I read that article, but they had numbers to prove it. Now, leaving Houston could mean maybe just leaving Harris County.
I was going to say Harris County
into League City or
Harris County's a different
Yes, because that's one of the advantages of the builders that we have. We have land. Right. We can go this
Houston has to go
west, north
up.
We can only go south so far, right? But we have the ability for builders to really spread out, and a lot of these builders they're going to Fulshire, they're going to Dayton. Even. So I think you're right. And that was one of the issues with the elections within Harris County and the Houston as itself, is that you have the majority of the people that don't actually reside right there in the city of Houston. So therefore, it was interesting to watch.
Well, and going on this, because I remember back when I lived in Cali. And all of my friends that when they were buying houses, they weren't buying in the heart of Orange County around our schools. They weren't buying in the heart of LA. They were buying in like Fountain Valley, like the inland Corona. You know what I mean? Like they were buying outside. And it's like, so Houston, a lot of the people who, when they finally become a homeowner, usually suck out probably. So maybe that's a good sign.
It could be.
But I do know that people are coming to Texas. Regardless, maybe they're not choosing Houston.
But I mean, you combine that what we're talking about, what you were talking about previously, with the, government in and of itself, without getting conspiratorial, okay? Because I could delve way off onto the deep end of this stuff and go completely nuts, but we'll not do that.
Do it.
No. But government as an entity has become this source, this nanny empire that it wants its subjects, you and I, to be indebted to the government and to look to the government for our sustenance. For everything. And the founding fathers said that's not what government is supposed to be, but yet that is what it has become.
Preach. You are right, and I agree.
I always tell people, I'm like, when you live at home, you do what your parents say. If your parents give you money, you do what your parents say. Literally, if you leave home and the parents now is the government, you do what they say.
Her son just heard that and went, "Oh man!"
I did. I think. we'll hopefully preach to him. Listen, you ain't getting nothing from us after a certain day.
That's
no,
right.
I'm kidding. But I do feel anybody that's in control of your pocket is always going to be in control of your brain and what you do. So, you know. So that's why sometimes just figure out how you can, being aware of what's happening and making your life work accordingly, I think is the best way to live.
Right. But I don't think anybody can look at that statement that I just made and disagree with it. Now, I don't care which side of
there's some crazies out there.
I don't care which side of the bird your wings on. I don't think anybody can really look at that and disagree with it because the facts are there. They're all over the place.
Right, right.
You know,
Oh, yeah.
Just look, open your eyes and look at what's going on. So that being the case, if we look at that as a probable, or at least a probable, but more along the lines of a definite.
Yeah.
Okay. How does that affect the numbers that you're talking about? If they want to keep us fat and happy, okay, how does that affect that situation? Do you see what I'm saying?
I do.
Yes, you got to get people got to get out of their houses.
Well,
you got to go to work. You got to put money back into the economy, because once money's back in somewhere, that's what I say. I'm like, you in order to make things work, everything has to be a give and exchange, because if we just stay in our house and we're ordering online and there's no reason to have commercial real estate anymore, it's going to trickle and get you.
Absolutely.
It's coming for you.
Yeah, that's no, you're 100% right, because it's all, it's all connected. But I think as it relates to rates, and what the feds are looking at, and if they're, potentially looking at numbers that are incorrect, what's going to happen is they're going to keep rates too high for too long. And what's going to happen? It's going to cause a recession, probably Q3, Q4, and Q1.
Girl, that's not fun.
It's not fun.
Good.
So, okay. So let me interject and say, so for those out there that don't do what you and I do, and that you do with much more experience than I, what do you say, aside from economy, aside from unemployment, or just state what makes the rate what the rate is?
Well, that's also a good question, because I think people they look at the Fed rate and think, well, that's what the rate is. No, I mean, right? They run parallel. They
do, yeah.
Yeah, they run parallel in sorts, but
It's analogous to asking somebody what's the price of gas.
Yeah.
It's different today than
it's
it's going to be tonight.
relative to really what mortgage-backed securities are doing, right?
Right,
what are they trading at on a daily basis? So that's why you see, and people also have this misconception. Well, if they're trading high, right, then that's good. If they're trading low, then that's bad. So that's what they look at. And man, has that been a battle for me, especially this year. And I think it's just because really a lot of these online lenders, for example, who I know that's taboo.
We just had a conversation about this. Continue.
So they were out there, right, really pounding in everybody's head that the rates were at this crazy low rate. And so it really got, I think, right, again, in my humble opinion, for whatever it's worth, they got people really looking at what they thought was what was the indicator of interest rates, right? And they were so way off base that it made it such a battle when you're trying to explain to a buyer, hey, that is not accurate. These are teaser rates. This has been going on since I've been in the business. And it's important that you're with somebody that actually...
I do, because just what we were speaking about, how... we all know the reason why Amazon is so good is because, Jeff has figured out we can store everything in these. We don't have any, like the overhead is so, we sell it cheap, get it to you mail. You pay for shipping, blah, blah, whatever the case, right? It's the same thing. I correlate that with the lenders who are online. They have no brick and mortar. They have no, like the overhead is different, but the overhead that you don't have with an online, it's going to affect how well you know what you're doing, how the process works for you. And because anytime an online lender is able to get those, teaser rates to you, is because one, maybe they have because you and I were talking about this on the phone. I was like, have you had people telling you that when they apply with you, I've had all these people call me?
Oh yeah.
There are relationships between some of these lenders, these pop up by day, gone tomorrow, that will buy leads from the credit bureaus. But no, but back to the purpose of the more we keep people inside and not going out there, right?
Yeah.
It's the same thing with lending. If you just want to deal with people online, of course, but do you know what's going on? Do you know how the loan process works? Are you comfortable buying where you're at? Do you know what amount of money you're actually paying for that rate? There's just a couple of things with those online lenders and stuff. So it's
you get what you pay for. I hate to say that, but it's true.
You do. It's a very interesting thing. There's lenders who, because lenders are paid differently too. So sometimes the difference in rates is because your LO is getting paid more, or there's so many things that go into it. What is their overhead like? Do they have the brick and mortar? Do they are they doing higher scale? There's just so many things. So I tell people all the time, you can get whatever rate you want, but I'm gonna be completely honest with you. I'm gonna tell you what you're paying for.
Well, and here's to piggyback off of that. Everything that we just discussed is super important for a buyer.
Yeah.
Right?
Oh, sure.
They need to know, do I buy the rate down? Do I maybe buy it down a little?
Have you done the math? Is the math computing? Are you saving? Are you saving more money than you're spending for that rate? Because sometimes people are like, I'll buy it down. I'm like, 2 points? I was like, you're buying it for $450. That's $9,000. So you're only going to save about $4,500.
So Jen, let me ask you this question.
Yeah.
Would it be a positive thing for a buyer at that point to take, okay, I've got all this data about the buy down and all this kind of stuff, maybe go to a Riley and a financial
like Robinhood,
and say, what is your?
I always, especially people who already have a financial advisor, I tell them, ask your financial advisor, share with him the information that I've given you, especially those who are investing. You want to know that the ROI is good, but specifically, especially now, for a fact that everybody that's buying a house now, because it's a good time to buy because everything's cheaper, obviously, because everything weighs itself out. When you refi, you got to pay for the refi. You do all new title. There's a whole bunch of stuff that you got to do. So why spend the money on the buy down when you have to spend it again?
Right.
You're only going to be in this loan 1 to 2 years. So look at how much money you're saving within that 2 years, and it's not adding or computing up to what you're spending. Don't do it.
See, this is some fabulous information.
Yeah.
Fabulous. I mean, and I think if people would actually, when they go into the housing market and they're looking to buy or sell, if they would actually ask their lenders these questions.
That's right.
And seek the advice and pay attention to the advice that you're given instead of just ignoring it and thinking, because I bought a house in the 80s, I know what I'm doing.
Right.
Well, the art of the loan officer has been lost.
Yes.
Because of all of these, call centers there's a gazillion you can name, so we'll just stay away from that. But what I mean by that, the art of the loan officer has been lost. Is as a loan officer, it is your job to advise, to counsel, to guide right into the right products. And because of, what's the lowest rate? What's your lowest rate? Hello, my name's Dana.
And I will say this because I just had this happen. I just, somebody just wanted a contract and I had them, they were gonna put 5% down. I said, well, let's just take the FHA. I know because the FHA's come down and the MI kind of gave, I said, it's hard for me to define to you, but I'm going to show you. FHA just going to have a better, he decided, he was like, well, what if I could come up with a little bit more money down? I said, if you do that, we're going to take you conventional. And he was like, so I sent him the loan estimate. He said, so the rate's higher now? And I said, I said, call me. They call me. So great credit, great ratios. So even though rates are always higher on conventional, we just know this is just the name of the game, right? FHA's backed by the government. Again, if your hand's in with the government, they gonna act like they doing you something good, right? But his mortgage insurance at 15% down was only $24 a month. I was like, You're going to save $150 on
Right.
mortgage insurance. So even though the rate is higher, you're paying less on a conventional.
Yeah.
That's what I mean. Like, so that's the whole purpose of doing this podcast, is because the more you know up front, because usually when people buy,
Yeah.
they don't have the time that they actually need to find a lender.
Yes.
It's like when you're shopping for your husband and your wife, look, it takes us 10, 15 years to find the right one.
Yeah.
But when you're looking for a lender, you're like, I think I'm going to buy a house, and then you just rate shop, and it's like,
Yeah, whatever
Surface
commercial
value.
that you've just seen on TV is who you call, and they make it so easy, right? You don't
Yes.
even have to talk to
or
the
you,
person.
or like what we were saying too. When you pull your credit, you've got people calling you from
Yeah.
the bureaus and being
Market
like,
trigger
"What was your
rates.
rate? I could beat you, or I could beat that rate." Oh, they love doing that.
Jeez.
There's always going to be somebody that has a lower rate than you. There just is.
There is.
Right?
There's just to think like this. There's always somebody cuter that my husband could have, but he likes me. There's always somebody who's going to have a better rate, but I'm a better lender for you.
You know what? And I think so much of that is on a business perspective. You know, it's not all about price. It's not all about rate.
Thank you.
It can't be
That's-
about price and rate.
that's the
if
point,
it does,
yeah.
you're going to end up shopping at Goodwill 24/7 for everything.
That's the point I'm trying to make.
And the simple point of the matter is, who is going to lead you in the right direction?
Yes,
that's
Who is
right.
going to save you money in the long run?
Right.
Who is the fiduciary person that has your back seriously?
Mm-hmm.
You know, I really wish.
or the
you
person
know
that
what I
just
wish?
gives you the information for you to make the choice. You're
Absolutely.
Yeah.
I wish every first-time buyer would watch this podcast series. I really do. Because there's so much information that
Yeah.
you will learn that you don't know right now, I guarantee you.
Well, it's
Yeah,
easier.
people do it, right?
You know, your first time home buyers are now getting younger, which is the exciting news.
Yeah.
But a lot of times that's why, like, I will make the silly comparisons to like relationships. Like,
Absolutely.
So when you're finding your significant, it's the same, like even your insurance person, you gotta have a relationship with your
Yes.
insurance person. Like,
Yeah.
we don't put enough time into picking the partners that we're with. So sometimes it's good if, you know, that's why I just, the realtors that because they'll take time in picking a realtor. You know what I mean?
And this is the largest
So-
investment most likely of your life.
Yes.
Yeah.
Yet you want to go to 123mortgage.com
Right?
because you saw that they had a 3.99% interest rate, and that's attractive to you.
It's
You
very
immediately jump to it. Hey, can you match this?
It's very attractive.
Okay, well, 123.com mortgage is charging you
Or again,
2.5
they don't have overhead,
points.
so they might not close it in 28 days
True.
because there's nobody working your
Maybe
file.
never talk to that person ever
That's
again.
what you're
And there's a pretty high likelihood that 3.9% rate, by the time the paperwork is all said and done, is going to be like 8.9%.
Maybe, but not even talking about, like, you know, because there's been plenty of times where somebody will call me and I'll say, that is excellent. What they are doing for you, that is a wonderful. I will gladly. I'm not going to make you do business with me if I see something. Again, it's a relationship. Like, sometimes, like, I'll call Dana and I'm like, hey, I've got this situation and maybe your guidelines are a little different. Do you think you could get a better synopsis for this person? Here's the deal. Da-da-da-da-da.
Yeah.
And gladly say, Dana, take him.
Yeah.
Because you want to, we all do enough business. The people who are doing business are going to be more honest.
Right.
Because they don't have to have that loan. Right? So
Yeah.
just make sure you're working with somebody who is really, truly, taking care of you.
That's fighting for you, and that's a good point that you just made, because and the reason why you are with your peers in this business, the reason why you and I can do that sort of thing is because obviously the love and respect we have for each other, but we do right by our clients, and that's the art of the loan officer.
Absolutely.
So that's unfortunate, but I think and maybe we should start doing first time home buyer podcasts and just flooding them with information.
Yeah.
Now I have found, I'm sure you have
The
too.
attention span is not there. So that's why we're
don't
going to try
wanna
and
talk to you.
take
They don't
15-second
wanna do
clips.
everything online.
They really do.
Yeah. But which is unfortunate because it is the largest purchase they will probably ever make.
Right.
And you need to be guided through the products that are right for you.
And really, because we've said this before, like your first home or the first house you're in or the average loan people stay in 5 to 7 years, isn't it? Yeah. 5 to 7 years. So even though you got, somebody closing today, they're like, man, 2053. Trust me, this loan will be far gone by then.
Yeah.
You're not like, unless this is your forever home and this is what
you're on your fifth or sixth one. Right.
So I had somebody the other day ask me if they could still buy a house with me because they were buying a secondary house. And I said, well, why wouldn't you be able to? Like, well, I don't think I'll be around in 30 years. I said, you need to stop talking like that. We can do loans to anybody.
Yeah.
It's like, but you can do loans. I don't care if you're 90 years old. Yeah,
if you're 39
Jim's looking for clients with one foot in the grave and the other one
on
a banana
but
peel.
sometimes people get nervous. Or
I get it.
Believe it or not, there's such little info given on the art and process of buying a house to people in high school or in college. Like, there's just not a lot of information. I had somebody that thought maybe being pregnant was going to affect her once she went on maternity leave, that kind of stuff. And I'm like, no, ma'am, you were okay. So
that's a good point.
Yeah.
They should have life skills in high school.
Yes. Tell me how to use a credit card and tell me how to
what does it take? What all goes into buying a home, right? Mm-hmm. Wow. Wouldn't that change something?
Mm-hmm. Right.
You know how many times I tell, if I could tell like an 18-year-old in college right now, don't open up your own credit cards. Yeah. Have your mom put you on as an authorized user. Mm-hmm. Make sure your parents, got their shit together. And they're doing well and making payments. But that actually helps you because at 18, I had credit cards on my own and I was an idiot. But had my mom put me as an authorized user, that's what I mean. Those types of things that, like, before I understand, I don't want to mess up because it takes a long time to come back from those late payments. More so than people who are maxed out. Yeah. Like, we can fix that with a little bit of money. Late payments?
Forget about it.
Oh my God, the math is like half step. Yeah. You never get there.
You never. And actually, so my kids are 25 and 23.
Yep.
I did exactly that.
Authorized user?
Authorized user. Mm-hmm. And let me tell you, they know the importance of credit certainly more than I did at their age. But any other kids their age, and their credit is impeccable.
Yeah.
And they are so funny because they just both got their own credit cards. Mm-hmm. My son actually works for me, so he'll probably roll his eyes at this. But anyways.
Are you watching? Roll your eyes.
Apologies ahead of time. They both just got their own credit cards. Mm-hmm. And I was a little nervous, like, okay, you've been on my accounts. Mm-hmm. Now let's just see if you've learned anything, right?
Mm. Don't destroy your 800.
Go out and spend, a gazillion dollars. Mm-hmm. They are both so paranoid to actually charge on that card. It is hysterical to me. Hysterical. Right. I mean,
you've done well. You've done well, Dana.
Yeah. Or they're like, okay, I'm going to spend this, but I'm going to pay it down to this. So I think it's hysterical. I love it.
It's good. It's good to pay off.
One good thing that I did for them, but that is huge.
It is huge because actually Dana and I, we actually met through Louisa.
We did.
Decent. Mm-hmm. And she's like a credit restorer. Mm-hmm. Like the fact that there are so many credit restoration people out there shows you how little knowledge is given to our young folk. Mm-hmm. But it is because what is it that they expect? The credit bureaus expect 98% or higher of on-time payments.
Yeah.
When you do the math, I tell people, I'm like, if you have one late payment and all you have is one credit card. Mm-hmm. If you have one late payment, that's 11 divided by 12. Yeah. And then next year, it's 23 divided by 24. And the next year, it's 35 divided by 36. 35 divided by 36 is not 98% yet. Right. It takes you years to make up for that one late payment. That's why they say, open those little ones for $150 and because it's more payments.
Yeah.
Right. You want 36 payments in 1 year versus have to wait 3 years.
Yeah. Mm-hmm.
Just little things like that. But the authorized user is
that's huge.
Magnificent.
Huge. I'm so glad I did it. And I'm so glad they're knock on leather.
Here's wood.
I can't reach the wood. That they continue that path.
That's really good. That's really good. That's the one thing I really want Brayson to be better at. Because I really think that financial freedom doesn't come in what you make, but how you, because I mean, I've done enough loans that I can look at neighbors and one of them got tons of money in the bank and the other one has a better job that pays more, but they live in check to check.
Yeah.
Just because of the skills of how they spend their money.
How they manage it.
Yeah. So wealth management is more important, I think, than
absolutely
wealth attainment, so to speak.
And I think too, my son especially, that he's a loan officer and he really, obviously sees that now, and he really sees, holy moly, can you really screw yourself up?
Yeah.
You know?
Yeah.
So I would love to see that. I would love to see this in high school. God, how valuable is that?
Sure.
I mean,
Like when you buy your first car, does it need to be a truck?
yeah.
That's
truck.
That's $900 a month. And then you're like, I'm coming to buy a house. I'm like, well, you're rolling around in it.
Yep. Good luck with that, buddy.
You're sleeping in that truck.
Especially down here in Texas, all of our young kids, I mean, they're making good money. Like, underwater oil rig welding, like whatever it is. Like, there's a lot of money to be made, but it doesn't matter if you got 9 different toys.
Yeah. I see that a lot.
Yeah.
And the younger, the more. Which
Because they got to impress the ladies. The ladies these days.
Yeah.
The house doesn't do much for them anymore. Like, what you riding in?
And they ask, well,
what are you wearing?
but I have all these things.
Listen.
Yeah.
You got a jet ski?
$1,200 truck.
And
you're boat,
and you're dressed to the nines. But
and you do make good money, but all your other toys have now, made it
depreciated.
Yeah, exactly.
And they depreciated. So at the end of the day, what do you have?
Yeah.
We're kidding. We're being hard.
Well, no,
listen, I was a knucklehead when I was younger, so I'm just
totally.
I'm just speaking to my younger self. My goodness.
I'm not kidding. To me, that's valuable truth right there. It
Learn
is
by
absolutely
the
valuable
mistakes
truth.
that we have made.
Yes.
That's what I say.
But if we wanted to even bring back the youth to what we were talking about as far as the market and what affects the market, I do hope that we continue to do things outside of the home. We continue to go out in our neighborhoods, go shopping in an actual store, go purchase your I mean, I love all this. Like if I'm having a rough day and I got to get my groceries delivered to my door, great. But if I like going into the store, because those are jobs that will go away.
You got to stimulate that.
And then what are people going to do? Like what? Not everybody can just become as famous as, because I see it all the time. Like people just want to be an influencer.
I want to be Mr. Beast.
You gotta get it. Just get out. Now, Mr. Beast though, he's a fun little, he's a cool little interesting dude.
Yeah, he's cool. But
I'm about to really expose my age by saying this.
I probably don't know either. So,
but I'm not going to say my age, but I'm going to expose. Probably.
We all know you're 30. Stop it.
Yes.
Yeah, it's 32.
34. But what is it? What does even an influencer mean? What is that?
Listen, I'm telling you, influencers, what they do is they become so popular for whatever reason they went viral.
Yeah.
Right? It's almost like, remember when you were in high school and whoever the popular kid, you wanted to sit with them, everybody talked about them. It's like, but now it's on an extreme level because everything's on social media. So now it's like all these people want to be, so they follow them and they have no reason to follow them outside of, I want to be known and connected with that person. And that person now gets so many views that say deals are made like, hey, I want you to talk about this. Yeah. So it's like an influencer has the value because they can influence mass people to believe in your product. That's the way we're going. That's why it's like, but it's kind of a weird thing. But an influencer is paid on views.
Yeah, that's like you or
I'm influencing
podcast. You. It's so riveting that we're just going to start liking.
We're influencing you.
You and I are laughing all the way to the bank because it all started right here.
Look at all these 10 views.
Exactly. My whole reason for being on that kind of stuff.
But we have real gigs.
I love doing YouTube. I love, social media, whatever. But do I want to be YouTube famous? No. I have no. That's too much work because it is a lot of work.
It is a lot of work.
A lot of work. So, do I want to be YouTube famous or social media famous? No. I am definitely don't have the looks to be an influencer. I don't have the personality to be an influencer. So I'm not looking to be an influencer. What I am doing is trying in hopes to get information into the right people's hands that need it at that time.
Yeah.
Yes.
That's it.
That's it.
That is solely it.
All kidding aside. Yes.
And from a business perspective, if I can influence one business owner, this is why you need professional video. This is why you need professional photography. Then it has cost, number one, it's cost me nothing. And I tell this to realtors all the time. That's why you need to be on social media. That's why, and business owners, that's why you need a page that has your business name on it. Because if that business page and your weekly posting, if you only post once a week and that lands in the right person's hands at the right time, boom, there's another customer.
Yeah. But I do anything you do. Let's just take influencer out. I mean, there are people who make a great living at being an influencer, just as there are people like us that make a great living at being an LO. But both of us are doing the same thing. We are exchanging ideas with our partners, and we are exchanging money with one another. So everything works with the exchange of money. So just as an influencer would never say, they're going to agree on, I'm going to do this for you at this cost. It's the same thing. I can do this for you at this rate, which is this cost. It's the same thing, but you have to figure out, is this influencer worth it? Is this LO worth it?
Right.
So it's all an exchange of things. So when people shop for rates, it's like, I feel like, are you shopping for someone who's really good at what they do? Or are you just trying to, that's why sometimes I'm like, just dumb it down to like when you're making friends, like, you know what I mean? Like, it's like, who are you really hanging out with?
Right.
You know what I mean?
That's deep. I like it. I like it.
Who
That's
are you
deep.
hanging out with? Because everything, what we were just talking about, just the market, everything is influenced by what we do as, what's that thing? A mega web. What's the thing?
Yeah, everything that you touch.
Yes.
Yeah, is a casting net, right? To everything else that's happening in your environment as far as
absolutely.
The market, like you said, going out there, stimulating the market.
Yeah.
Realizing that our rate environment now is actually normalized. These
Right,
are
right.
normal rates.
Anyways, we covered a lot of stuff.
Yeah, we did.
This was enjoyable. Like, I didn't even know that we usually only film till 11:30, and sometimes we wrap early. This one, we had a lot of info on this one.
Well, yeah, there's a lot of good
This will be a fun one. I
thought
like
it
it.
was fun too. It's always good.
You'll have to come back and do some more. This was fun.
Let me, go down some more rabbit holes, and then I'll be back.
Yes, absolutely. Anyways, well, thank you for watching. Thank you, Dana, for coming by. It's always a pleasure to see you. But normally we're just having lunch and wine, and today we were really chit-chatting, so I enjoyed
We
it.
were digging deep today, which I liked.
And always, as always, John, thank you.
Yes.
So,
thank you, John.
hands out. Goodbye. Thanks for watching. See you later. Bye. Ciao. Ciao, Bella.